Hi guys, welcome to another episode of The Aspiring Entrepreneur. I'm your host Hamza Chowdhury, and today it's Thursday, February 18th, 2021, and we just want to go over some of the stocks that we cover in our Sunday channel, and that's going to be Apple, Tesla, Palantir, and AMD for this week. As always, I hope you guys are having a wonderful trading day and a wonderful trading week. I think overall the market looks pretty weak. Looks like a lot of the gains that we saw back in January and February and all-time highs, it's starting to retreat. A lot of the stocks that we probably trade aren't even trading at all-time highs, and they're starting to retreat as well. And so, just make sure you're following your risk management plan and that you're, going into any trade with just a little caution, and try not to get too sort of in with the earnings season early. A lot of times we like to buy on the dips, but we realize that, just because a stock sells off doesn't mean it necessarily hits the bottom. And so what you want to wait for is some type of validation, whether you're buying off of earnings or you're buying off of, some type of news catalyst. Just make sure that you're waiting for some type of engulfing candle. If you're trading on a minute chart or a 15-minute chart, however your trading style is, that you see some type of validation that yes, the stock is rebounding, the volume's coming in, it's holding key levels. Okay, so let's just jump right into Apple. We've outlined these sort of thin supports, which we call DAP plays. We say you add shares, and so we failed at 133. We failed at 130, and when we fail, we're literally failing in a day. We're not even really testing. And so our ultimate go heavy on Apple was always about 127, 127.50. And today you can see here that the low, the day's range is 127.41 and 129. And so we had a good bounce. And the reason why that's such a good level for us is we've just had a ton of previous consolidation at that level. We've had several bounces off of that level. And keep in mind that Apple was 145 just last month, and now we're back at 127. So we've lost about 15% from the all-time highs. And tech in general just looks really weak. If you look across the tech sector, a lot of these stocks, except for the Bitcoin stocks, have really skyrocketed, and even the marijuana stocks has retreated. So it's really hard, and it's really affecting most people. If you're in a sector and you made a killing, which in January. There's a good chance that that sector is retreated from those all-time highs. And so if tech is going through the same rotation, it's nothing to worry about. You're holding on to quality companies when you're holding on to Apple, but this is definitely an opportunity to dip buy. And then of course, like I said, we expect that 130 will reject, act as a resistance. And once we can sort of break through 130 and hold that level, then we can start to get back up and hopefully get back into what we thought was real serious resistance at 136 before we just saw the sort of market sell off the last few days. And so you can see that we held a very tight range before we just sort of failed. Okay, so with Apple, again, looking for the bounce at 127, 127.50, which we got, and looking to close above 130 for a long-term play. If you're looking for an option play, buy on these flushes down when you see an RSI is essentially oversold and you're near a key level, and then you can just sell them for 20, 30, 40 a buck when it starts to rip back up. Okay, Tesla, same thing, just a weak stock. Had plenty of chances to sell, and I've just been sort of back holding now. The stock, we mentioned that it's just been going sideways and it's been failing. It's been trading. I mentioned it would trade under 700 or under 800 a few weeks ago, and so we've definitely solidified the support at 770, 775. And we maintain that. So you can see today, right, we've had quite a number of bounces. So the 775 support that we identified a few weeks ago has been solid for us. We did slightly trade below that, but you can see the rejection constantly of that price. So I feel still pretty good about Tesla. I think, like I said, the whole tech and a lot of the stocks in general are just selling off. People are taking profits, and it is going to be soon tax season too. So for various reasons, you can argue why people would want to, sell and maybe, pay Uncle Sam for all the profits they made last year. And you can see that yesterday we had the perfect bounce off of the 50-day. And of course, as we get closer to the oversold and we continue to see the flattening of the negative momentum, I definitely see that the stock will come right back up. And I definitely expect it to at least get to this 20-day, which lines up with this first resistance level that we identified as 835. You could argue that this level right here at 800 is a resistance level, and even the 805 right up here. But like I said, these are, to me, with just a sell-off, I just don't really consider them real serious resistance levels. I'm really looking up here in starting to get in the 830s before we get some serious resistance, and then of course a real serious big resistance at 860. And keep in mind, guys, Tesla was up here trying to get past 900, and that's when it failed and it started to retreat. Okay, so again, we haven't had a 50-day bounce, you know, since back here in mid-November. So this was healthy for the stock. And if you're back holding, you just wait and just be patient, right? That's the best part that we'll talk about, why it's nice to have shares and not necessarily options on some of these plays. And so for Palantir, interesting question posted by one of our viewers yesterday. You know, someone had mentioned that the lockup period, and they were wondering what that would do and if it'd go below 28. And I had responded that, you know, this is the day we've been waiting for, right? That the day that the shares would be flooded. We had talked about the fact that the algos had probably brought the stock down in price before earnings as well, accounting for the fact that you're gonna have a ton of shares. And why allow, you know, these profit takers sort of to sell at the all-time highs when we can essentially flush the stock down back into the 20s, where it's done heavy consolidation in the mid to high 20s. And so what I mentioned yesterday was that we could definitely slide to $25 by tomorrow, which would be today, and that it's a good idea to sit on your hands and letting the sellers flush out. Okay, so if you were essentially waiting and waiting, you saw that Palantir hit right below 25. I think the low today was right here at 24.50. Okay, and we've been sort of holding that 25 level for most of trading day, and we're about a little over almost 5 hours in the trading day. We're about to close in about an hour and a half. And so, you know, this 25 level is a key level. And so when you're buying, you know, something on the lower band here, the Bollinger Band, this is the risk that we should have saw when we were trading up here. But guess what? Now you have all this volume, right? So this is where necessarily the sellers were, right? All the sellers, if you look at the imbalance locator, which is basically a locator to tell you where the orders are prior to the market open, it's a buy and sell. There was a sell imbalance of like 10 million shares coming into open. So there was that many shares of people just wanting to get rid of the stock right at open, because now guess what? The lockup period's done. And that's what was the key for this comment here was, guys, the worst news is done. The earnings are done. The lockup period's done. Now it's time to start buying shares. Buying shares with this, capitalizing on this negative momentum, the fact that we're oversold on the RSI, the fact that we're on the bottom part of the Bollinger Band. This is the time. The fact that we're below the 50-day, this is when you buy shares and you go even heavier. Okay, obviously we like the 27.50 for a constant bounce from back here, but we failed that, and we're even getting a bigger discount. So if you're a long-term bull in Palantir, this is definitely the place to be adding shares. 24.50 is a steal for a stock that was just trading at $39 a week ago. So definitely excited about it, and you know, adding shares. I'm now going back to selling calls. So for calling on all bag holders out there, if you are holding on to Palantir and you're like, do I just sit here and watch this thing? You can actually make money, and you do so by selling weekly calls. And so today I did sell a bunch of calls for tomorrow, and you know, at the open, when Palantir makes this push up here, and let me just go ahead and get rid of this. So when Palantir is making this sort of push in the morning, right, and you can sell, I would definitely recommend at least to where you're breaking even or out of the money, whatever you're comfortable with. And then guess what? So you sell the calls, and then as Palantir either retreats, or let's say it even gets closer to that price, that value of that call will go up. And so what you can do is you sell the covered calls, and then tomorrow, assuming that Palantir does not close to your price, and let's say it's $30, then you get to keep that premium. Okay, so sell those calls at the price that you're holding at, so at least you're making money while you're waiting for that. And keep in mind, if it hits that price that you own it at, you're going to make all your money back plus that premium. So there's no way you can lose on this strategy. So a lot of you guys who might be back holding, I think I told you guys that I was, you know, up in the money going into earnings, and I've always suggested on this channel that you don't hold full size on this channel, but I didn't mind because I had this game plan of what my risk was, but I managed to sell before earnings a small portion. I wish I sold majority of my portion now, but it's all part of the learning process, guys. We all make mistakes and we all learn from them, and as long as we're honest with ourselves and we pick up and, you know, sort of learn from our mistakes, that's how we play, and that's how we stay in this game in a long time. So last one is AMD, and this is a stock that I do want to talk about. You know, we always talked about this triple top at 96. We talked about the killer earnings that really should have made the stock dive right up to over 100, which it did post market, and it went to 99, 98. Of course, the algos do that for a tease. And so we traded below the 50-day. We found this bottom, and I mentioned earlier in the week on our Sunday video that 87 was our support. So you can see here that the low today was 87.31. Okay, so we retraced all the way back to our what we identified as a support at 87, which you can see for 4 or 5 days we constantly bounced off of. Okay, so I mean, yes, you can call $90 as another support, but this was the one that we were waiting for considering this massive sell-off. So we've rebounded nicely on that, guys. If we finish the day positive, then I can see, you know, 87 holding, and then we could try to get back to retrace back into the 90s. But one of the things I do want to talk to you guys about, and I'm a big fan of options. As you guys know, I trade options pretty much on a daily basis. I will say though, however, to give you an example of why you got to be careful how you trade options, is so on this day, or this day here, it was this day, I actually ended up buying something at the end of the day. So I bought a ton of calls end of the day when AMD was under 90 bucks, and I was like, okay, we're under the 50-day, and obviously we clearly see that the stock wants to go much higher, and so let me buy some options. And my rule has always been to buy them a few months out. And so, you know, the earnings seemed like they just came out yesterday, but they came out the 26th of January. So from this day all the way to here, the options that I bought when AMD was trading under $90, even when AMD was trading up here at 94, I was still down. Okay, now I was down a small amount, and again, it's all part of it, but you got to keep in mind the theta, right? You got to keep in mind this whole idea of in options of time decay, because those options for me expired in March. Okay, so the closer you get to March, the less those options are worth, right? Because the price is slowly getting to March 19th, and we know it's going to be fixed. It's not at $100, it's at 90. And what I found interesting this time though, because like I usually strategically buy options 3-4 months out, is that when I bought something that was, let's just say, about 45 days out, something down here, guys, at $90 or $89, even at 94, if you were trying to sell that same option, wasn't even worth the same as it was, let's say, what is that, about 10 days earlier. And so for me, it's just sort of a reminder that you got to follow your plan. You got to follow your rules. If you don't have your rules printed on the wall, taped on the wall, glued on your head, right, this is what can happen. And so I was like, well, wait a minute, why am I getting March to calls? I mean, we're a month out from March 19th, right? So now we're talking about a theta that essentially is, the stock can go to like $98, and maybe it might be a break-even trade. So again, the thing with options, guys, is you got to remember the time decay. The closer you get to expiration, the less it's worth. And so if you're buying something here, like I mentioned, buying the calls here at 89, when this thing was trading at 94, I wasn't. And it was just shocking to me because I had made such a killing on the options. And then I took it out. I took majority of the portion out. Guess what? Here for a small loss. Still managed a solid green day that day. But what happened was I realized, hey, wait a minute. Let me get out 2/3 of my portion, my share portion there. And that way I could hold on to a third just in case we continue this momentum. And guess what? We've had 3 straight red candles, and when it does come back, it's going to be even worth less, right? So like I mentioned, it might have to go up to 96, 98. So always manage your risk and don't get greedy. There's nothing wrong with taking small losses. It's part of trading. You cannot always be right. That is the downside of options by far, right? Is this idea that as time will go against you. Now, if you had shares, who cares? You're just a bag holder, and you can do what? You can sell calls. So with that said, guys, I'm going to end this video. Hope it's helpful for you guys. And like I said, we'll end the week tomorrow, hopefully with some good news. We usually like to end the week. It was a short trading week. And so with that said, guys, best of luck as always, and I'll talk to you guys soon. If you have any questions or comments, post them below. And please do hit the like and subscribe button to our channel. Always love to have you guys on this channel. All right, guys, bye-bye. Take care.